Hello friends, welcome back to this quick demonstration of the ES market flow. We have been tracking this for a while, years, and we were tracking this all along since November, and we also were giving us the projected moves, and we got this top projected move, and this is coming from, if you watch the previous video, you will know how to get these moves and how we rotate them. And as market moved and it broke down after certain levels of projected moves, if I bring it across, so I cloned this drawing, which is a projected move on the upside. You can watch the prior video how we calculated this on the YouTube channel. If you just go to YouTube channel here, videos, I think go to 369 forecast playlist, and you can search on ES or SPX. All right. So here we have taken the projected move and we have replicated across 1, 2, 3, 4 times. Okay. And then what we are saying is we have reached the hidden frequency of 8. And because of that hidden frequency of 8, we went to half the square in this 4 replication of the measured move. And what does all that mean in details? You have to go and take a very extensive 3-month course where we define all the market maker hidden structures in level 1 and level 2 with 22 automated tools. This is the first structure. You will go through all these complex dimensions and you will know exactly what is going on, how market is playing out. Anyway, so we also, where we left off was that, hey, market is compressing like this. In the previous video, have a look, and we said, watch out for the breakout. It's going to blast one way or the other. But because of the projected move, which you didn't know about, we had a completion of the second square through the fracture of the first square. And what does that really mean? You have to understand the dynamics behind the numbers. Complex numbers and how they interplay in the market. Nothing is random. All right, so the rally came to a conclusion based on that phenomena. And what we have done here is, well, we had this compression. We talked about it in the previous video. As I said, the break and the retest is of interest to us. So market broke down, it came back inside, and then it failed again. And look at the oscillator of interest at this point is overbought, right? Overbought. And where is it trying to reach? And now this top swing is where we have put in the mandala. We have a lot of things we're talking about in mandala. There's a rotation of mandala in various dimensions and various structures, and there's layers of mandala. Now this is another kind of mandala where we trap the balance point of the swing, and if the midpoint is respected, then we know where this is going, and then we have these levels. Now this is the ultimate termination point. Okay, these are intermediate termination points, and there is an ultimate termination point. These are all just frequencies. And if you know the magic of the markets, this is all pretty simple. Finding this is virtual impossibility in one single lifetime. All right, so we have these levels. One thing we can always share is if something is going in a sideways action and vibrating, that two things can happen. This is a balance point. Market went up, made a balance point. So this can be treated as a 50% point. And you can just do a doubling circuit phenomena to find out where it is going next. So it went there, right? It does not mean that this logic is only limited to small swings. You can also think a little bit bigger and saying, okay, hey, this is a big swing and then sideways action. If I take this as a 50% chance on my measurement or somewhere in the middle, this is just a rough estimation. Let me move this around right here, right? Somewhere here, somewhere here. So that's getting a rough idea that, hey, market went and then it held sideways for 2.5 days. Two things can happen. We have this point, either it's going to go up from there, just like it went from this level, or it is going to crash down to the next level. Now, based on the conditions of the market, the market took its chance to go to the next level. Precisely, we knew that. Now, these are simple, fundamental, technical analysis ideas. As a trader, you should be aware of it. If not, now you are. Now, when we reach this termination frequencies as initiative move shown by the greens, terminated by the reds, we know that we have reached a certain point. And then we are expecting a reversal to take place, and then the oscillators comes later. Now, when the sideways market is going on, you can also see that oscillator is also right in the middle. It is not really giving us any bias momentum. It is just rotating at the mean between the two white lines. So there's no evidence that, hey, it's going to go up or down. Is anybody's game, right? So how do we deal with this? It's a different situation. But if you have to buy something, this is where we have those value area lines. And they are moving down the yellow line. And there's a value area line. And we have added so many value area lines here that based on different time frames, that bias, if I just read from here that, hey, market is punching down. So if I have to take and flip the coin at this point, I will be biasing that, hey, it may not hold. Plus, you can see the trend has shifted down. And what I'm expecting when the trend line, then I can draw the two touch. We talked about the third touch trend lines are very strong. One touch, second touch. Let me remove this one. And third touch, right? And the trend is down. At this point, we have a little bit of little confusion. What are we going to do, right? Well, there are ways to solve this. I just showed you that the value itself, this maroon, brownish, depends on how you it shows on your screen. Let's say this brown color line, right? This is a true value. It is already showing the negative bias. And it is below all the moving averages starting from this point. So you have to take a bias and say it's not done yet. And you know this termination point exists. It is a price magnet and it just rallied like crazy from there. And it went where? To the levels. So now this level was not respected on the way down, but it was in the next way. And the key thing to also understand is that, hey, this decision point by the big banks came at our levels. That's the most fascinating part, that, hey, this happened at our levels. Mostly things happen at our levels. Why is that? Because we know the natural phenomena of the market. We understand the harmonics. We understand the natural sciences. So this is where it came down, reacted. Here it went sideways, right? So if it is going sideways, all the ecosystem is saying, hey, I don't think it's done going down, right? And then this is twisting, everything is twisting, and the bias is, if I have to must trade, I will. And if you are concerned about you are confused, always hedge. Always do hedged trading. There's nothing else stopping us to buy straddles here, right? Now you can also do unbalanced straddles. You can do unbalanced back ratios. This tactical move is something you can work with your professional advisors. So now here it is. Now we bounce from here. We all rejected from our moving average retest. The best one is break, retest first time, second time, and third time is going to blow, and it is most likely heading in this direction. Now we have done some projections based on this phenomena that hey, if it eventually it's going to blow and blow and blow, and this other up target is going to go back to these levels eventually by zigzagging, right? So this could have been the pullback we were expecting for this quarter. It may just go up again, like, you know, A, B, C, D, right? So anyway, if it breaks down, now we don't have the break, because if you assume that this line, let me get rid of this ones now. Now let's assume that this line is being traced, and if it breaks down, we don't know where it's going to break immediately here. It may be breaking down here when it gets into the compression as it spirals into this majestic spirals right here. So it's going to blow again. Now if it breaks around sometime here, we can see if it breaks, we are expecting it to retest this level again. And if it breaks and stays above this level, eventually it will go up to these levels, right? And this is where the trading becomes challenging. Okay, if you don't get into these panic moves, extreme moves, then you try to catch up. It's too late. At least for this move, it's late, right? If you know this level in advance, what is the cost of knowing this in advance? If you make $5,000 in one trade, what do you think is the value of that knowledge? That's all you have to ponder upon. But these other levels, and I think we are already mapping these as such, and then we go from there. Thank you so much.